Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Force Motors, why it is a complete avoid, and what lies ahead for the company. So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Force Motors, it's most request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, which is a dedicated watch list with targets and stop losses for short term. A number of stocks in there, about 70 stocks, and also you'll have access to a lot of podcasts that I put up. Even today, I put up a podcast and post that I put up exclusively for Patreon $10 members. If you have a number of stocks with you individually and you want to discuss with me, you can email me and we can work things out. Now about the company, Force Motors was established in 1958 and they make passenger vehicles and commercial vehicles along with tractors. It has a nationwide presence and was known as Bajaj Tempo till 2005, so was part of the Bajaj group. I'm sorry. They also manufacture ambulances and school vans. The market cap of the company is around 1500 crores. If you look at the financials, and this is Q1 FY21 numbers, so sales had dropped by around 78% to just 185 crores. From a 27 crores profit, the company has gone into losses of around 63 crores. The debt is high when you compare it to other automobile companies. The debt is high, and remember, this is not a company which is into capital goods, into infrastructure or power, that the debt should remain high. So this is a cause for concern. Return on equity is merely 4.7%. Operating profit margin is 6%. So it is nothing great to write home about. High promoter but low institutional holding is there. If you look at the performance, then stock has been relentlessly coming down since 2015-16. So it surged a lot in that small cap rally from 2014 March, in that 1.5 years. But since then it has been falling. It is down 80% from 2018 highs, if we take that as a number, 2018 January. So for the last virtually 3 years it has been falling, and it has wiped out 80% from the top. Numbers have continuously been weak, so it is not that the stock is falling a lot and the numbers have been good. It is just that merely that the numbers have been bad and the stock continuously falls. Have been selling on any major up move, so whatever 10-15% up move comes in, the stock falls. Domestic auto slump accelerated the fall, and whatever that has taken place over the last 6 months has meant that many companies which are small in nature, many companies which are probably not the leaders in the pack, have gone into total oblivion. And that is what has happened with something like Force Motors, which have been completely decimated during this pandemic time. So why is the stock falling? Industry has been under stress. If you look at the overall industry in the CV and HCV segments and tractor segments, apart from escorts and a little bit of Mahindra and Mahindra, there are no other, you can say, major players which are doing well. So that's what I was saying, that industry wise, one or two companies are doing well. In passenger vehicles, Maruti is doing well. In you can say tractors, etc., escorts is doing really well. But what has happened is smaller players in the same segment which were doing well, say 5 years back, are nowhere in the picture, and that has really hurt Force Motors badly. Even in their four-wheeler division, there are other brands like Mahindra and Mahindra which have pitched in big time, and Force has lagged behind. So this is one concern. Business was in any case in distress till 2018-19. So from FY17 onwards, things were really bad, and then we had the current situation which has accentuated the problem in 2020. So last 3 years were bad, and then it culminated into what happened with the pandemic and whatever that has taken place over the last 6 months. Then they had a lot of debt, and that's why I avoid companies with debt or debt laden companies, because in difficult times, in situations where there is heavy stress in the economy, these companies will you can say wilt under pressure, and that is what has happened with something like Force Motors, because interest burden kept on rising, because debt, even if debt doesn't go up, then interest cost goes up when you're not making a lot of money. If you're not making profits, you have to pay your debts, and that's how interest burden keep rising, and that is what has happened. Plus, domestic infrastructure has been under stress, so their CV, HCV business has completely gone for a toss. Unless there is infrastructure push, unless there is GDP growth, unless there is domestic growth push, companies like Force Motors may still struggle going forward, because their passenger vehicle arm is not that strong as is with even a Mahindra and Mahindra, not even comparable to Mahindra, let alone Maruti. Because if they are not able to make money this way or that way, then they are going to be under stress, and these interest costs will keep on rising. Plus, they have a lot of exports to other South Asian countries, to other East Asian countries, but exports have remained sluggish with slow global economy and the distress of the pandemic, the distress of the shutdown of the economies globally and in, you can say, neighboring countries. Exports and exports have also got hurt with respect to supply. So supply chain has got totally disturbed over the last 6 months since March. So that has also meant that going forward for the next 1 year, things look difficult for such companies. So prospects do not look very bright, and that is why people are not buying into the stock even at these levels, even at levels which looks more attractive in nature when you consider a normal situation, because normalization of situation will take at least 6 8 months even now. And when the vaccine comes out, when things become normal, then we can look at such companies as Force Motors. So why I believe it is an avoid. Interest burden, a big drawback, as I have mentioned, that unless the company makes a lot of profits and then they have minuscule interest comparable, then it's okay. But right now the burden is will keep on rising with the company in losses. Next 1 year, at least next 12 months, will look difficult for the industry, considering, not for the industry but at least for the company, considering as to what is going on. So big is becoming bigger, something like a Maruti or an M&M is becoming much bigger than you can say a Force Motors. And industry will, this industry, when you're talking about trucks, when you're talking about HCVs, tractors, etc., will grow when rural economy and complete economy grows a lot. I'm not talking of passenger vehicles, because Force Motors is not quite up there in the passenger vehicle domain. So this will grow. Force Motors will continue to grow when economy grows, and that is why the company or the stock went up sharply from 2013 August September or 2014 March up till 2016, because at that point of time there was a vision of the government that to grow the economy further, to have digital economy, etc., and bring, you can say, the rural phase back to the urban thing, and the rural and urban divide will be less and everything else. So that's why these stocks came went up. But right now the economy is under complete distress, so you need to understand that in at this point of time it is very difficult to see companies like Force Motors do well. Domestic CV numbers continue to hurt. Domestic CV numbers are not that great. It has been 4 years of real pain in the CV segment. So one has to be very careful buying into companies thinking that valuations are very right. So just considering that the current valuations are very ripe and you just buy into the stock that it has fallen 70-80%, so let's buy it. That would be a foolhardy thing to do. Valuations are stretched with stock surging since March. So from March onwards till now, the stock has gone up 40-50%, and it need not go up because everything has gone up. So you have to understand that which stocks are now you can say attractive even after the up move, whether the growth will continue. Like in the electronic manufacturing segment, growth may continue, but in the CV segment I still feel that next 1 year could be difficult. There are better options available elsewhere. There are better options in the pure passenger vehicle stream, in the auto ancillary theme, rather than going into buying into trucks or four wheeler companies which are second or third rung. If you look at the technicals, then strong short-term support is at around 1000 and next support is around 800 levels. So it has gone down a lot from around 4000 levels. It has already been to 1500, 1400 level. A major up move is expected only above 1500 levels. You have to understand that the stock has fallen around 70-75% even after the up move that has taken place over the last 6 months. So very weak on charts technically. You cannot also take a, you can say, a short term trade. If you take a short term trade, keep your strict stop losses very close by, because this is a difficult trade to take, and that's why it is a complete avoid both on the short term basis as well as on the long term basis. Strict stop loss around 1000. If 1000 goes, then we are looking at 30-40% more downside on the stock. So what needs to be done? In my opinion, it is a complete avoid. Look for other options, look for other industry, and that's why I like the consumer space more, because it's the numbers are easy to understand, and we can envision as to how the numbers can be going forward, just looking at the markets physically, just looking at the malls, just looking at that space for the company that you're buying. So if you're buying a biscuit company, if you're buying a cake company, you can look at how the selling of such products are taking place. So look for consumption place elsewhere. Can destroy wealth even now. So even from these levels it can go to 500-600 levels. It's not out of the realm. And even if you're having it, have less than 5% of exposure into such stocks. So this was my video on Force Motors. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it, and support me on Patreon. Thanks a lot for watching.